income tax updates. And what it's going to amount to is a little bits of housekeeping and some legislative changes here. So let's get into it. First section here, what major changes or lack of changes there is in withholding. As you can see there, most of the forms aren't changing. We have had a little bit of an issue with our higher level returns. They are taking a little bit more time. If you do have an issue that exceeds 4 months, feel free to reach out to us, and we will see what we can do about getting that resolved as quickly as possible. There is some new WIT credits that are out there. Well, actually, reimagining of an old credit, reimagining energy and vehicles there. That is credit code 5920. That can be taken on the withholding side now, at least up to the amount of income tax that's attributable to new employees and retained employees. That's what the credit can amount to against withholding. Live theater production tax credit, that's credit code 5980. If you're out there producing a nonprofit theater production, you can take that credit. And also the local journalism sustainability tax credit. That is a credit that is generally taken in second quarter. It's issued through DCEO. There has been some issue with payroll providers not being able to submit the WC, the scheduled WC, or not wanting to submit that WC. If you have had that issue or have experienced that issue, if you just send in the scheduled WC and tell us what quarter that amounts to, we can take care of that as well. There is this letter that's going out. It's in regards to minimum wage credits. Seems like there is most of the minimum wage credit are having this letter triggered. What they're looking for in processing is a breakdown of the calculation or how that was calculated. If you just respond to the letter with that breakdown and calculation, that should resolve that. Right. Without further ado, we're in business income tax. Here, there's a few more updates. Returning citizens credit, we have another component, or a new component there, coming through MyTax Illinois. Dan will talk about that later in another section, so I'm just going to leave it there. It's the old credit that has existed. It's just a new way to apply for it. Otherwise, advancing innovative manufacturing for Illinois, that is credit code 5440. That's for capital improvements made to new or existing facilities for the purpose of modernizing, upgrading, and automating, streamlining manufacturing or production processes. Quantum computing, that was just some changes to the DECO administration, as well as Rev Illinois and apprenticeship education credits. The EDGE credit was expanded a bit, and it opens it up to any recycling and melting of steel products and manufacturing of new steel wire and rod, as long as there's at least 700 full-time jobs there. Illinois Enterprise Act has been expanded to include construction of new high voltage direct current converter station facilities. These are all the schedules without any major changes, so that's good news for us all. And next, we'll go through the major public act here, 104-006. There are 4 parts to it that I'm going to address each individually. So the first part is transition from Joyce to Finnegan. Finnegan's idea is that a group of corporations engaged in unitary business should not have any different tax rate than the same business. So the same business would if it was a single corporation. So basically, under Finnegan, a unitary corporation would either have nexus or not have nexus. Joyce allowed interstate commerce to be subtracted out of the apportionment factor, where Finnegan is going to be, if you have a nexus, then all your sales will count there. Generally, through the call center, if you have questions regarding this, or we're not really equipped to do that, that's one that we kick directly up to legal. If you have questions in regards to any of that, you want to write in for a letter. All right, here's our 80-20 changes. This is, we're just removing basically the first row of checkboxes, step 2, line 6C. That's the removal of interest and royalty safe harbor deductions there. And then I also included the text here of the act on 2 different sections. One that includes non-business income, and the other that's business income in regards to gains or losses for sales or exchange of shares of PTE. So that's treated a little bit different, and we'll go through how we need to report that here now. One of the big changes here is that in several different spots, you need to use the apportionment factor over the last 3 years from the entity that issues the credit. So I'll point out when that apportionment factor, that averaged apportionment factor, needs to be used as we go through this. Right, individuals here. So CR, that money is reported on line 7. And must subtract the apportionment amount from the entire amount to calculate column B. And for NR, that's reported on 11, and the same there. So here, individual claims money on capital gains on their federal 1040, line 7, and then carry it to R 1040, line 1. And it would flow here and report on schedule CR and NR, at CR line 7 and line 11. And here is one of those points in time we have to use the average over the last 3 years to calculate NR or CR correct. Right. Moving on to corporations. Business income, that's reported on line 27. Non-business income would flow through the NB and also have that 3-year apportionment, that 3-year average for column B. Here's what that looks like. It's the business income. It goes down as normal on line 29. And here on the schedule NB, I want to put a little bit of note or caveat out here. Most of the income changes from the Act affected only tax years ending on or after December 31st of 2025. However, the PTE capital gains portion went into effect as of the signing of the bill. I believe that was 6/16 of 25. So because of that, 2024 returns that are filed, we're asking for that to be reported on the other lines on the schedule NB and the K1. And for 2025, for those returns, we have, as you can see up here, included a new lines that is 9A and B is used on that NB to report those PTE losses and gains. All right, there's a new step in section in the K1P. This one's for only 1065 filers. We have them reporting that directly. The retired partner distributed share of retired payments, and that whatever is apportioned to that retired partner. They're on step 8. Column B there, of course, the resident, it would just be the exact amount entered in column B, and the non-resident would be the distributed share that's apportionable to Illinois. There are changes that are added to the verbiage here of K1P 1 and the K1T 1 instruction sets. That is to facilitate how the PTE gains and losses were reported on line 19, or that other gain, the other income line. And trust, we're only looking for, we're only expecting to see non-business income here. And we'll talk about the trust here to follow. This is just the summary outline. 1041, we claim the money as capital gains on line 4 of the federal 1041, and it should be carried to the Illinois 1041 line 1. Again, CR and NR here reported on line 4 of both. And moving on to partnerships, 1120 STs, they're a similar approach. Depends on if the income is going to be retained or distributed. This is retention here. If the business income would need that apportionment calculation, the 3-year average, and non-business would be reported on the NB with that 3-year average as well. So here in the retention side, line 1 is where you would report your PTE gains, and it would go down to line 41 as usual. And distribution here, business income line, that's either line 26 or 27. Non-business income lines would be line 18. Here for 2024 returns, you're using that other line, as we said before, and the 2025 or beyond, you'll be reporting those lines on 26 or 27 on the K1P. Schedule J, GILTI percentage has changed flat across the board to 50%. Lines 16 and 17 are reserved. What they're going to be reserved for is lines 17 and 18. We're looking for that percentage to go up in the next legislative session. More information, hopefully, as we get it. And finally, BIT returns without any major changes are here. And to round in mine up, my section up, this is business income pending legislation. This hasn't been signed by the governor yet, but we expect it to. House Bill 1437, that extends the River Edge redevelopment zone credit. That extended that one out for 2 years. The apprenticeship education expense credit, that's extended to 1 year out. Senate Bill 1911 has a little bit more moving parts. It makes the pass-through entity tax permanent. That removed the sunset of that, and also decoupled from bonus depreciation provisions federally. So we decoupled from that new 100% bonus depreciation. So our 4562 is going to cover 30, 40, 50, 60, 80, and 100% bonus depreciation. That 100% bonus depreciation will be adjusted the same way it had been before, when we had the 100% distribution bonus depreciation a few years back. It also added net control foreign corporation, so CFC and NCTI to the provisions. So that's what changed the GILTI to 50% across the board. There is another WIT change that I would be remiss not to mention. It provides a film production company or authorized payroll service to withhold tax on compensation paid to loan out companies. Currently, how those things work is that actors are all in loan out companies. The film production company writes one check to the loan out company. That loan out company does the withholding over the year or years that it takes to produce the film. We're not sure of the direction on this one. I assume that more information is going to come out later, but right now we're treading water on that one. So if you have any questions or concerns for us or for me, you can get me directly at craig.w.anderson at illinois.gov.